All right, everyone, get ready because today we are taking a deep dive into the sometimes confusing world of savings, interest, and taxes in the UK. And specifically, we'll be looking at a video from the one and only Martin Lewis to try to understand, all the ins and outs of how to make sure that we're keeping as much of our hard-earned interest as possible. So
Exactly. Yeah, we'll be focusing on kind of practical tips and tricks that you can use to kind of maximize your savings and minimize your tax bill.
Okay, well, I have to admit, I've always sort of assumed any money I make for my savings is just taxed, income from a job. Is that actually the case?
Well, it's actually a common misconception. A lot of people think that. But in reality, you're only taxed on the interest that you earn from your savings, not the actual amount of savings that you have.
Oh, so it's like the government's only interested in the profit my money is making, not the initial amount I actually put in.
Yeah, exactly.
Yeah.
It's kind of like if you think of your savings as like a little money-making machine. The government only wants a cut of the output, not the actual machine itself.
Okay, that makes sense. But how much interest can I earn before the tax man comes knocking?
Well, that's where things get really interesting. The UK has something called the Personal Savings Allowance. And this is essentially like a tax-free bubble for a certain amount of interest.
A tax-free bubble. Okay. I'm intrigued. Tell me more.
So for basic rate, taxpayers, which are people earning between £12,570 and £50,000,
Okay.
they get an allowance of £1,000 a year.
Oh, wow.
So that means that you can earn £1,000 in interest before you have to pay any tax on it at all.
Okay. That's pretty good.
Yeah, so for example, if you had a top easy access account that was paying 5% interest,
Right.
you could have £20,000 in there, and all of the interest that you earned would be completely tax-free.
That is a decent chunk of change. What about those earning a bit more, though?
Yeah, so for higher rate taxpayers, which are people earning between £50,000 and £125,000 a year, their allowance is £500. And then for additional rate taxpayers, those earning over £125,000, unfortunately, there's no allowance at all.
Oh, that's tough. So the more you earn, the less free interest you get. I guess that's how it works. But what happens if you do go over your allowance? How do you actually pay tax on savings?
Well, there's two main ways that it works. If you already file a self-assessment tax return, you just include your savings interest on that form. But for most people, especially those who are employed and don't have complex financial situations, it's actually taken care of automatically.
Automatically, so I don't have to do any extra paperwork or calculations.
Exactly, as long as your interest income is under £10,000.
Okay.
HMRC receives all the information from your bank, and then they adjust your tax code accordingly.
That's surprisingly painless. I was expecting something much more complicated.
Yeah, it's designed to be fairly straightforward.
Yeah.
But the really exciting part is that there are actually ways to protect yourself from paying any tax at all on your savings interest.
Okay, tell me everything I'm listening.
So one of the primary ways you can do this is through something called a cash ISA or an individual savings account. And this is basically a special type of savings account where all of the interest you earn is tax-free.
Wait, seriously? So I could potentially earn thousands of pounds in interest and not pay a single penny in tax?
That's the magic of a cash ISA. There is a limit on how much you can contribute each tax year, and it's currently £20,000.
Right.
But the great thing is that you can keep adding to your ISA year after year, so you can build up a really substantial pot of tax-sheltered savings.
That's like a snowball effect for tax-free growth. I like that.
Exactly. And the best part is that now that interest rates are finally on the rise, these tax savings can really add up over time.
That's amazing. So that's the cash ISA. What about any other tax-efficient options? Are there any alternatives to that?
Yeah, so if you're feeling a bit more adventurous, you could always consider premium bonds.
Oh, premium bonds. I've heard of them, but I'm a little fuzzy on the details. What are they all about?
So premium bonds are essentially government-backed savings bonds. And instead of earning interest, you're entered into a monthly prize draw.
Right.
And all of the winnings are tax-free.
So it's like playing the lottery with my savings, but hopefully with better odds.
Yeah, in a way it is. But remember that while the prizes can be, quite substantial, there's no guarantee you're going to win anything.
Right, of course.
You could end up with a much lower return than you would if you just had your money in a top cash ISA.
Okay, so it's a bit of a gamble. But, who doesn't love a little thrill in their financial life, right?
Exactly. And ultimately, whether you're going for the security of a cash ISA or, the excitement of premium bonds, it's important to, weigh the pros and cons and choose the option that best suits your individual needs.
For sure. Okay, so we've covered how savings interest is taxed, and we've looked at some exciting tax-free options. What about people who aren't actually taxpayers at all, or, those just starting out in their careers who have lower incomes? Do they get any kind of special tax breaks?
Yeah, absolutely. So everyone in the UK has what's called a personal allowance, and this is a tax-free allowance on all income, including savings interest, and that's currently £12,570.
So if your total income, including any interest you earn, is below that, you don't owe any tax at all.
Exactly.
Okay.
And then to sweeten the deal for lower earners, there's also something called the starting rate for savings.
Starting rate for savings? I haven't heard of this one.
Yeah. So for example, let's say you've just started working and your income is, let's say, around £15,000 a year.
Okay.
You can earn an additional £5,000 in savings interest on top of that personal allowance before you start paying any tax.
Wow, that's a great perk. So even though you're earning over the £12,570 threshold, you could still earn over £6,000 in interest completely tax-free.
Exactly.
Amazing. I think the starting rate for savings is definitely one to keep in mind for those lower earners.
Definitely. And it's important to note that the starting rate for savings only applies if you're a basic rate taxpayer.
Okay, that makes sense. All right, we've covered a lot of ground here. Personal savings allowance, cash ISAs, premium bonds, starting rate for savings. There's so many layers to this. It really does pay to understand all these little nuances of the system.
It really does. Knowledge is power when it comes to your personal finances.
Couldn't agree more. Okay, so far, we've really gone over all those kind of basics of how savings interest is taxed and uncovered some exciting tax-free options out there. But I think it'd be really useful to take a closer look at how these concepts actually work in practice. So after a short break, we'll be back to break down these strategies even further and see how you can apply them to your own savings goals. Welcome back, everyone. I'm already feeling a lot more confident about, making my savings work harder for me.
That's great to hear. It's really all about finding the right strategy for your individual circumstances. And what works for you might not work for someone else.
For sure. Okay, so let's delve a bit deeper into those tax-free options we talked about. Cash ISAs sound almost too good to be true. You're telling me I can just open one of these accounts and just watch my savings grow without even worrying about tax?
Yeah, pretty much. Cash ISAs are actually incredibly straightforward to set up and manage, and you can find competitive rates from various banks and building societies.
So let's say I'm a basic rate taxpayer, and I utilize my full personal savings allowance, which is at £1,000, and I also contribute the maximum £20,000 to a cash ISA each year. Does that mean I could potentially have £40,000 in savings, generating interest completely tax-free?
That's exactly right. And that's just for 1 year.
Yeah.
Remember, you can continue contributing to your cash ISA year after year. So you can build up, a really substantial nest egg over time that's completely shielded from the tax man.
That's a really powerful strategy, especially for those long-term savings goals like a house deposit or even retirement.
Exactly. Now, on the other hand, we have premium bonds, which offer a more exciting, albeit less predictable approach to saving.
Okay, so with premium bonds, instead of earning a guaranteed interest rate, I'm relying on luck to win a prize.
That's the basic idea. Yeah, each bond that you hold is entered into a monthly prize draw.
Yeah.
And the prizes can range from £25 all the way up to £1 million.
£1 million tax-free. Now, that would be a nice surprise, but what are the odds of actually winning something?
Well, it's a bit like playing the lottery. There's no guarantee, and the odds of winning the top prize are, pretty slim. However, there are literally millions of smaller prizes that are awarded every single month.
Okay, so while I might not become a millionaire overnight, I still have a decent chance of winning something along the way.
Exactly. And for some people, that element of chance, it adds a bit of fun and excitement to saving.
I can see that it's like adding a little bit of gamification to your finances.
Exactly. So how do you decide whether to play it safe with the cash ISA or take a chance on premium bonds?
Right, that's the big question, isn't it?
Well, it really comes down to your own personal risk tolerance and your financial goals. If you prioritize, guaranteed returns and peace of mind, a cash ISA is probably the best option for you. But if you're comfortable with a little bit of risk and you like that thrill of potentially winning big, then premium bonds might be more your style.
It's almost like choosing between, a reliable workhorse and a spirited racehorse.
I like that analogy. And, just like with horses, it's important to understand the strengths and weaknesses of each option before you make your decision.
Absolutely. Okay, so we've explored the power of cash ISAs and the excitement of premium bonds, but let's not forget about the starting rate for savings, that kind of hidden gem for lower earners.
Yes, definitely. The starting rate for savings can be a real game changer for those who are just starting their careers or who have more modest incomes. It's like a bonus allowance that allows you to earn even more interest tax-free.
Can you give us a real-world example of how this starting rate for savings might work?
Sure. So let's say you're a young professional and you're earning around 18,000 pounds a year.
Okay.
You're already benefiting from that personal savings allowance of 1,000 pounds, right?
Right.
But the starting rate for savings kicks in on top of that, and it lets you earn an additional 5,000 pounds in interest completely tax-free.
So even though you're earning above the general tax-free allowance of 12,570 pounds, you can still potentially earn over 6,000 pounds in interest before paying any tax.
Exactly.
That's incredible. This starting rate for savings is definitely something everyone should know about.
Definitely. And again, it's important to remember that it only applies if you're a basic rate taxpayer.
Right, of course. Well, this is also eye-opening. It's amazing how many allowances and options are actually out there just waiting to be, discovered. Who knew saving money could be so strategic?
Yeah, it's all about making your money work smarter, not harder. And as we've seen today, there's plenty of clever strategies to help you do just that.
We've definitely covered a lot of ground, from the personal savings allowance to cash ISAs, premium bonds, and the starting rate for savings. We've demystified some of the, key aspects of UK savings and taxes. But before we wrap up, let's bring it all together and really empower our listeners to take action. Okay, so we've learned all this stuff, but what's the best way for everyone listening to actually apply this knowledge to their own savings?
Well, I think a good place to start is to figure out where you actually stand. Take a look at your current savings, calculate how much interest you're earning, and then consider your tax bracket. See if you're exceeding that personal savings allowance or not.
So it's like a financial self-assessment.
Exactly. Once you've got a clear picture of your situation, you can start to explore, which of these tax-efficient options best aligns with your own financial goals.
So if your goal is to maximize that tax-free growth, a cash ISA sounds like a no-brainer.
It's definitely a great option, particularly for those long-term goals, like I mentioned earlier, that house deposit retirement. But don't discount premium bonds entirely. They do add that element of fun, and you never know, you could get lucky.
True. You never know when luck might strike. It's always good to have a little fun with your finances.
Absolutely. And of course, if you're a lower earner, don't forget about that starting rate for savings. It can make a real difference in those early stages of your savings journey.
It's like a secret weapon for those just starting out.
Exactly.
Well, we've covered a lot of ground today, but I feel like this is just the tip of the iceberg when it comes to this world of savings and taxes.
Yeah, there's always more to learn, and the key is to stay informed and explore your options and never be afraid to ask questions.
Well said. And remember, you don't have to navigate this alone. There are some amazing resources out there that can really guide you, like Martin Lewis and his website, moneysavingexpert.com.
Absolutely. They have a wealth of information, tips, tools, everything you need to make the most of your money.
It's like having your own personal finance guru in your pocket. All right. So as we wrap up this deep dive into UK savings and taxes, what's the most important takeaway message you want our listeners to remember?
Well, I think it's this: don't let the complexities of savings, interest, and taxes intimidate you. With a bit of effort and the right knowledge, you can unlock those secrets to tax-efficient saving.
Right.
And watch your money grow.
I love that it's all about taking control of your finances and making those informed decisions to help you achieve your long-term goals.
Exactly.
And remember, the journey doesn't end here. There's always more to learn, more strategies to discover, and just more ways to empower yourself when it comes to your money.
Couldn't agree more.
Awesome. Well, thank you so much for joining us on this deep dive into UK savings and taxes. We hope you found it useful. Until next time, happy saving, everyone.